Today was a big day for Marvell Technology stock. Shares of Marvell, ticker MRVL, surged about 15% in after-hours trading on March 5th after the company released a strong fiscal fourth-quarter earnings report that beat Wall Street expectations across the board. After the market closed, MRVL jumped to over $87 per share as investors reacted positively to the company's results and, more importantly, its bullish outlook for the future. Let's first look at the key numbers from this earnings report. For the fourth quarter of fiscal year 2026, Marvell reported adjusted earnings of 80 cents per share. That slightly beat the analyst consensus estimate of 79 cents per share. Revenue also came in strong at $2.22 billion for the quarter, representing a 22% increase compared to the same period last year. But the biggest catalyst for the stock move was the company's forward guidance. Marvell projected first-quarter fiscal 2027 revenue of around $2.4 billion. That is significantly higher than the Wall Street estimate of about $2.28 billion, signaling that demand remains very strong. Even more importantly, management significantly raised its longer-term outlook. The company now expects fiscal 2027 revenue to approach $11 billion, representing more than 30% year-over-year growth. This was a major increase from the previous forecast of about $9.5 billion. So why is Marvell seeing such strong growth? The main driver is the explosive demand for artificial intelligence infrastructure. Marvell is a key supplier of custom AI chips, networking silicon, and high-speed connectivity solutions used inside massive data centers. These components are essential for connecting thousands of GPUs together to run large AI models. The company's data center segment has been growing particularly fast. In fiscal 2026, data center revenue grew about 46% year-over-year. Management expects this momentum to continue, forecasting roughly 40% growth for the segment in fiscal 2027. During the fourth quarter alone, Marvell's data center revenue reached about $1.65 billion, making it the largest and fastest-growing part of the business. Another major growth engine is Marvell's custom silicon business. The company designs specialized chips for hyperscale cloud providers. One well-known example is Amazon's Trainium AI accelerator, which is produced with Marvell's custom silicon technology. This custom AI chip business doubled in fiscal 2026 and is expected to grow another 20% or more in fiscal 2027 as the industry transitions to next-generation semiconductor nodes like 3-nanometer and eventually 2-nanometer technology. Investors are also encouraged by Marvell's strong position in AI networking and optical connectivity. These technologies act like the nervous system of AI clusters, allowing thousands of GPUs to communicate at extremely high speeds. In addition, the company reported record design wins in fiscal 2026. That means many future products have already been selected by customers, providing strong revenue visibility through at least 2028. Marvell is also expanding its technology portfolio through acquisitions. Its recent deals involving Celestial AI and XConn are expected to contribute about $250 million in revenue by fiscal 2028 while strengthening the company's interconnect and AI infrastructure capabilities. Now let's take a quick look at some of the key market statistics for MRVL. As of the market close, the company had a market capitalization of roughly $66 billion. The stock has traded between about $47 and $103 over the past 52 weeks. Its price-to-earnings ratio is around 26, and the company currently pays a small dividend with a yield of about 0.32%. So, what are analysts saying about MRVL going forward? Overall, Wall Street remains bullish on the stock. The consensus rating among more than 30 analysts is currently moderate buy to buy. The average 12-month price target is around $114 to $116 per share. That suggests potential upside of roughly 40 to 50% from the stock's recent levels. However, price targets vary widely. The most bullish analysts see MRVL reaching as high as about $156 over the next year, while the most conservative estimates are closer to $67. Looking ahead, analysts expect Marvell's revenue to continue growing throughout fiscal 2027, with full-year sales approaching $11 billion. Earnings per share are also projected to increase significantly. The consensus estimate for fiscal 2027 is about $3.61 per share, which would represent nearly 25% growth compared to fiscal 2026. Despite the strong outlook, there are still a few risks investors should keep in mind. First is valuation. After today's surge, some analysts believe the stock may be slightly overvalued in the short term compared to its historical averages. Second is customer concentration. A large portion of Marvell's revenue comes from hyperscale cloud companies such as Amazon, Microsoft, and Google. If these companies slow down their AI infrastructure spending, Marvell's growth could also slow. Finally, geopolitical risks such as U.S. chip export restrictions and global supply chain disruptions could also impact semiconductor companies. Overall, Marvell appears to be one of the key players benefiting from the global AI infrastructure boom. With strong growth in custom AI silicon, high-speed networking, and optical interconnect technologies, the company is well-positioned to capture a large share of the expanding AI data center market. Today's strong earnings report and raised guidance clearly reinforced investor confidence, which explains the sharp 15% jump in MRVL stock after hours. Thank you for watching. If you found this video helpful, please consider liking the video and subscribing to the channel for more stock analysis and investing insights.